What is going on? In this video, we're going to be talking about EMAs and SMAs. Which one is better? Which one should I use for my trading? What do they mean? Okay. My goal is to make this very, very, very simple for you so that you can get better at trading and you're not hung up on the idea of like the technicalities of the thing. So I like to break things down very simple and explain it to you very simple so that you can actually take your time going in the market and implementing rather than figuring out what should I do and things being led to more confusion. So we're going to talk about EMAs and SMAs. So me personally, I use the EMAs. Okay. And what does the EMA mean? It stands for the exponential moving average, and SMA stands for the simple moving average. So what's the difference between the two? The difference between these two are the MA is a moving average. Before we even go to E and S, MA is a moving average. What that means is there's a line on the charts inside of the trading view. We're going to go into the charts and I'm going to show you there's a line, and that line will basically aggregates all the data from the past however many days you specify, and it will take the average price of however many days of the stock, and then it'll be trailing around the candlesticks. So if I say I'm going to use the 9 EMA, that means I'm going to use the 9 moving average, the exponential moving average. If I say I'm going to use a 50 SMA, that means I'm using the 50-day simple moving average. Now, the difference between EMA and SMA is E stands for exponential, S stands for simple. Now, from the exponential perspective, the EMA, exponential moving average, means that it is, so let's say we're doing the 9 EMA. It is the last 9 days. The average price of the last 9 days is the EMA for the 9 EMA. The number is just how many days. But on the exponential side, it factors in explosive moves inside of that calculation. Now, the SMA doesn't factor in the big moves that happen very quick, right? So it doesn't calculate that. So some will say that the SMA is a little bit more reliable because it doesn't factor in big moves in a very small period of time. And but I personally use EMAs. Some will say that they use the SMAs for swing trading and leaps because it's a little bit more reliable for the longer term. So some people may use the SMAs for the longer term trades, and then some people may still use the EMAs for short-term trades and longer-term trades. I've seen people use both. So those are the differences between the two. Okay. So which EMA should you use? What I use is the 9 EMA and the 21 EMA, and I also have the 200 EMA on my chart. Right? Some people use the 12 and the 48, the 13 and the 48 EMA. Everybody has their own style. I always like to say there's more than one way to skin a cat. It's about you and your trading style and what are you looking for. I kind of got trained on the 9 and the 21, and I've just been dialing in my strategy so that I could get better and better and better. All right. So we're going to go on the charts now, and I'm going to show you the differences between the 9, the 21, and the 200 EMA, how to set it up, and also how to use it in your trading. Okay. So we're going to go to these charts right here. Okay. So I have all my indicators are going to be turned off. And we're going to go one by one. So before anything, this is a blank chart and this is on the SPY. So what you would do is you would go to indicators and you would go to exponential moving average exponential, right? You would click that. However, you would click it 3 times for your 9, your 21, and your 200, right? And then what you would do is you would go here, you would go to settings, and you would go to inputs, and then the length. The length is however many days. So the first one you would click 9, the next one you would click 21, and then the next one you would click 200, right? And then you want to make them different colors. So my 9 EMA up here is blue, and then my 21 EMA is orange, No, my 9 is orange, my 21 is blue, and then my 200 is yellow. All right. So that's how you want to set those up. So I'm going to delete that. So I'm going to turn on my 9 EMA right here. It's orange, right? Then I'm going to turn on my 21 EMA, which is blue. And then I'm going to turn on my 200 EMA, which is yellow, right? So this is how you use these. So as you can see, the 21 is 9 and it's a shorter term. The 9 is a shorter term. It's 9 and it's shorter term. And the 21 is 21 days instead of 9. So on my 9 EMA right here, I don't get in calls if if we've been in an uptrend and then the stock breaks through the 9 and the 21. Okay. Now the 9 is above this 21 right now because it's in an uptrend. And so as long as, if you're in a trade in the calls, and as long as the stock is continuously above this 9 EMA right here, as you can see, that is when you stay in the trade. You don't get out the trade until the stock starts to come through and break through that EMA right there. Okay. So you see right here, you could have gotten some calls right here, rolled it up. And then as you can see, it started to try to come in, then it tried to keep going up, but then it broke through the EMA. So your stop loss could be somewhere right there. So you could have got in a trade from here, took it to the max, and then when it started to come down, you hit your stop loss and you get out. Right? So that's how you would want to take that. The EMAs are very helpful for me because they let you know an uptrend and a downtrend. So on the 21, so the 21 is basically the opposite of the 9 from the perspective of, you see how this is on a downtrend. So if you're in puts and you get in, let's say right here, as long as the stock doesn't break through this 21 EMA, because if it breaks through the 21 EMA, or if it breaks through the 9 EMA, it's going to be on an uptrend, right? And so that would mean that it's reversing. So I would stay in the trade until the stock broke through. It might hit a stop loss right here if you were in puts right here because it did kind of come through. But as you can see, it ended up going down further, right? But you need to know your levels as well, okay? And I like the EMAs because they also could serve as levels also. It doesn't matter what the stock is. Let's say we want to go to Apple. Same thing. Also, the closer these EMAs that are together, the more likely the stock isn't going to be making any explosive moves, right? So like right here, you can see that the 9 EMA, they started to separate a little bit. And then once they started to separate, it gave room for the stock to kind of go up into an uptrend. And it's the same on the opposite. So you see right here, this 9 EMA is above the 21 and it has room to go up. Now, the further that the stock gets away from this 9 EMA, the more likely the stock is going to be coming back closer to it because the stock always wants to be around here. This is like its equilibrium right here. So on the outside of it, you can see it went up and then it started getting too far and overextended. So it ended up coming back in there, right, to test it. Doesn't mean that it's going to come down, but that means that it wants to test this to see if it could go higher, if it's going to stay around the same or if it's going to end up dropping. Okay. So it doesn't matter what the stock is. The only thing that matters is you got to know your levels, but also once you see these right here, then you kind of know what to trade and how to trade it because of where it's at, right? So those are the EMAs. Oh, let me go over the 200 EMA also. The 200 EMA is very important. So the 200 EMA is going to let you know like when we're in like bear territory, right? Or an actual downtrend instead of just a pullback, right? So like, let's say Apple, or this is IWM. This is a pullback right here on a continued uptrend. This is a pullback and then it goes up there, right? These are all pullbacks to ultimately go higher. When a stock starts getting under this 200 EMA, that's when we really want to start looking at puts. But this is only on the 15-minute time frame. The longer the time frame, the stronger the trend, right? and the more accurate. So for the long-term picture. So like as we can see right here, this stock on the 1 hour it's not closing below the 200 EMA, but right here it closed below the 200 EMA, and as you can see it dropped lower, right? So if you see these wicks right here and it only tests under the 200 EMA, it's not going to go lower, but if it comes down and it closes like an actual whole candle closes below, then it's going to go lower, right? So this stock went from 226 to 225, and depending on how many contracts you got, you could have made a pretty nice penny on IWM, right? If you go to the daily time frame, it's pretty much the same, right? Once this stock is below here, then it's going to end up going lower based on the average, but the average is always changing with the stock price also, right? So this lets you know, and also this is a good place for reversals. If you're looking to swing trade, this is a good place for reversals, because as you can see, it hit this 200 EMA and then it bounced off and reversed. If you look at any of these EMAs, if it goes below the EMA, then we're going to a much lower level. So this broke the 200 EMA on the daily. It was at 150, it broke it, and now we're going it came all the way down to 115, right? AMD. If we let's look at coin. Coin broke below here. It came down after a breakout. It tested a level, and then now it's above it, and now it blasted off, right? So this 200 EMA is very significant, and it's going to let you know what direction the stock is going to be going into. All right, so that's how we use that 200 EMA. That's how we use the 9 EMA, and that's also how we use the 21 EMA, right? You can use the MA, the SMA if you want to. Me personally, I like to use the EMA. Like I say, that's how I got trained and taught, and I like to kind of stick with that so that I can continue to, evolve my plan and my strategy. So that is the EMAs and the SMAs. I hope that this helped you. If you want to continue to learn how to trade and get better, join the Prosperity Collective, which is a Discord that we have going on. Click the link in the description. We trade every single day. We signal all of our plays, our swings, and our day trades as well. And we have a lot of information in there that can help you become a better trader and also a better human being. All right. And always remember, get out of your head and get into this world, because your head is a dangerous place to live. I'll see you guys on the next video. Peace.